Good morning and welcome to another webinar. We are happy to have you. We've had several sessions so far, and we started by talking about tax in general. We then got to a level to discuss about what people are doing within their filing returns, and today we are here to discuss tax efficiency for oil and gas sector. With me today are my usual panelists. I'll start with the lady on my left to introduce herself.
Thank you, Collins. Good morning, everyone. My name is Regina Mwangi, a certified public accountant. I have been in the tax space for a little over 10 years, and I'm the tax manager at Equity Bank. And I'm glad to be here. As always, happy to be part of this conversation. Thank you, Collins.
Thank you, Regina. They say ladies first and men before.
Yes. Thank you, Collins. Again, good morning, our viewers and everyone there. My name is Martin Waweru, CPA, Certified Public Accountant. I'm the managing partner, Nitram Accountants Africa. I am a committee member of tax committee of ISPAC. And so we are in that space of offering audit, tax, accounting, and business advisory services. And we are happy to be giving value to our clients.
Thank you, Martin. Regina. To our viewers, my name is Collins Wanyonyi, Director for SME Banking for Equity Bank, Kenya. So let's get to the real business. So Regina, I was watching our social handles. I can see you've been trending. How is the feeling?
Well, I think it's just, let's say, I'm happy that I'm adding value to our customers out there, sharing information that I think all of us as taxpayers need to be knowing. Yes, and I'm grateful that Equity Bank has provided this opportunity for us to share that information.
Thank you. So, Martin, we pay so much money to professionals like you to give this service. And now we've just gotten all your knowledge onto some LinkedIn pages. I've been seeing clips. So how much will you charge me for that free service that you've given now?
Behind the tent. We'll agree. And as Regina has said, information is power. Yeah. And I believe what we are kind of telling our clients is as long as you're in business, compliance is not a choice, it's the way to go. And compliance is not just in Kenya, it's global. And as such, compliance equals survival in the business space. And that's why we are here.
Thanks. So in the discussions we were having in our last episode, in the last webinar, there were conversations around how we file taxes. And one of the items that came out quite strongly was how do we account for those of us who fuel our vehicles, our private vehicles, for doing business. So there's an element around how do you account for that. Martin, you remember that conversation?
Yes.
Maybe some juice on that for our viewers.
That is what Regina has been trading on, about documents and records keeping.
Yes.
Proper records keeping to track your records or business expenses. And then at which point we were talking about introduction of eTIMS, which Regina explained very well what is the eTIMS. And it has always been a habit. I believe that's why, Collins, you are passionate about that. You just fuel, then you run. Or you go. So never have you ever been bothered to ask over an expenditure or the receipt. And so KRA in their way of enhancing compliance and noting that petrol stations are offering a unique product, not anywhere. They are offering regulated price product. And as such, it was an easier route to enforce or to ensure mandatory adoption to the eTIMS regulations. And so the petrol stations were the very first people to be told you have timelines to adopt eTIMS adoption. Okay. And so what does that then meant is that anytime you get into a fuel station, give your PIN, as the buyer, then you'll be given a valid eTIMS invoice for allowable expense on travel, which reduces your profitability in the business, then it becomes a deductible expenditure.
Thank you. Thank you, Martin, for that introduction. So today's session, you're going to address a number of items. So first of all, I want to demystify the ETMIS implementation in the fuel retail operations. For anything that is moving in this country, it has to stop at a petrol station. That's what we used to call them. Some people call them gas stations.
Yes.
I don't know because
From
is
the
it
West.
From the West.
From the
eh?
West,
Yeah. So that is one of the items that we need to cover this time.
Yes.
Then we also look at the tax pain points specific to petrol stations. And just before when we were preparing for this session, we did invite quite a number of our customers and our partners who are in the oil and gas sector. So I'm sure quite a number of the stations are logged in. My customers, members, how are you? So there are quite a number of items we're looking at. And then the last item we want to also look at is look at the compliance, how we then protect the dealer profitability. So those will be the main areas. And as usual, to our members, please share any questions on the chat so that we can be able to deal this and support you. So Martin,
Yes.
and I've just remembered that before we get into this, there's been some new changes in the industry. So you talked about, was it what mashinani? Ushuru mashinani.
Mashinani, yeah.
And now I'm confirming that you are. People call it deep state. You said about it and it was launched. So maybe some highlights on that. And maybe Regina, as we talk about this, there was also something else that came out recently. WhatsApp tax
WhatsApp
filing.
filing,
So
yeah.
Martin?
Yeah, thank you, Collins. Information is power, and looking ahead is what helps people to remain at it and are proactive towards achievement of their goals. KRA, in their celebration of 30 years of service, and in their pursuit of expansion of tax base to bring everyone to the tax net, they have now come and thought twice. They borrowed from Equity, so they should see you.
Behind the
Equity,
tents.
yes, and the Equity Mashinani. So they have brought in what we call Ushuru Mashinani, which is more of a one-stop office or a center to offer the very basic tax, like tax returns, opening of the PIN, and such. So it will be helpful for individuals who want to file their taxes, they have challenge. So instead of walking all the way to the KRA offices, and these are things that can be sorted out by a junior person, for example, you'll now have different places across the country. And the good thing is I can, with confidence, I believe that KRA will be keen to recruit who is the person at that very desk. We as ISPAC would look forward that the accountants who actually the tax agents would be the ones to man that, because the danger would be allocating a taxpayer an obligation that they are not subject to. For example, you'll find your PIN has the primary objective is IT1 or I2TC or P for a partnership or corporate. So if you are an individual, your primary tax obligation is to file individual tax return. And maybe if you're an employee, you just file the P9A form. That's all. But if someone, by virtue of adding an obligation, adds VAT, you'll now be on a monthly tax obligation. So we look forward that through the induction, KRA will be keen to who they are onboarding, what are their competencies, not just having a computer and access to internet. So it is bringing the tax services to the very accessible points at the village level.
Oh, thanks.
Mashinani.
Oh, that's great. What's up?
Well, in the spirit of being Kenya Revenue Service, KRA is really working hard to get in touch with everybody, and they recently launched WhatsApp filing, a very simplified form of filing, just the same way for an employee, you'd have your P9, you'd find your details on iTax. already populated from what your employer has been filing, the same can now be done on WhatsApp. So it's for the very simplified sort of returns, not company returns. For individual returns, especially where it's an individual who has employment income. So KRA is working to get closer to us. Kenya Revenue Service, I think I see it coming.
Wow.
Thank you so much. So we'll get into the serious conversations around the oil and gas stations, so the petrol stations operators. So Martin, maybe you could walk us through the few operational challenges that these players are having with e-teams.
Thank you, Collins. Petrol stations, or what you call oil marketing companies. So in Kenya, we know of those big brands, which they are not the ones who run the fuel stations. Number one, oil is a regulated product, which has its own regulator, EPRA. And we are fond of the 14th, 15th, thereabout, change in price and all that. So, but this oil, where did it come from? Outside Kenya. So it's an imported product. And as such, oil is a product that is taxed over tax. We are talking of the very common known VAT. Over time, petrol products, oil products were VAT, they didn't have VAT. Then introduction of VAT was brought around 2018, thereabout we had a subsidized rate of VAT at 8%. But now oil products are fully taxed at the 16%. That's what we need to know. But before the oil, that oil product gets to the outlet, the petrol station, it has come through with added levies. Talk of excise duty, talk of the levy on railways, all that, including EPRA levy, it's there. By virtue of control and regulations of that product, because it is a sensitive product. So by the time it is getting now to your car, you'll be charged that now what you'll be seeing, the 16%, and it is a 16% over other levies. Yes. And as such, it is quite a sensitive product that then requires an enhanced tax compliance reviews. Not a one-off, but a day-to-day keen eye around that. So, but before that, who is this operator? Is he operating as a company or what form? And is this product, where is this product stored? A petrol station is really an investment. When you see it, a lot has happened. Part of the licenses that the operator of that petrol station gets, not one, not two, quite many. The investment of the underground tank or the storage is quite heavy. Also the pumps, and these pumps are now kind of, they talk of calibration. Calibration, is it more or less of automated? Yes. So you don't just sell that. You don't just sell that anyhow. You need what we call a POS. So there is a lot of compliance requirements to be achieved before you are even allowed to sell that product, including the safety, the NEMA, and all that. So we have the storage, which is an investment, which has a tax component in it, and then to the end product that you have imported. Now, whose product are you selling? Is one of the major MNC, oil marketing companies. And as such, you will have to be in an agreement. You will have a franchise agreement. That franchise, it has its own tax implication about the loyalties and all that. Regina, you can think around that area. But then, when you are now in business, you need now to look into the day-to-day tax compliance. But who is also operating this? These are employees. So we would look at the taxation of employees, the pay-as-you-earn. Who comes around to check around the compliance? These may be consultants. So there will be an element of, even us, when we are engaged, we will charge, and our amount is above 24,000. So withholding tax. So when you look at a petrol station, and also, how is the model of these outlets? Look at any given petrol station around you. It has like quick shops. Who is the owner? Maybe the owner of the
petrol station.
petrol station. And the products that are there also may be a mix-up of those zero-rated and exempt, and now the
16%
normal
standard rated.
VAT rates. It then means that as the operator of now that business entity, you need to have a keen eye on overall day-to-day tax compliance.
Okay.
So you look at it as a very complex kind of
Quite a
setup.
lot that happens
Yeah.
in a petrol station.
Yes.
And so, Regina, one of the things that, as Martin was pushing this, I was just looking at how will you then recommend and guide our viewers who are running petrol stations on this piece where there's an element of credit sales, and how do they account for the tax for the credit sales? And this could be for fleet cards, for the corporate clients and the likes.
All right. So from our previous conversations, there's always been a discussion of e-teams, and where you're doing business in Kenya, then you're required to issue e-teams invoices. Martin has touched on petrol stations also being required to issue e-teams invoices. And so in your system, then you're able to run a credit note and pass it through e-teams as well, so that it's able to reduce your sales for that month. And remember, for you to issue a credit note in the system, there has to have been an invoice, because an e-teams credit note is matched to the initial invoice that you had posted before. So it is also very important to make sure that when you're raising the invoices, find their e-teams invoices, but when you're doing a credit note, it has to be matched to the invoice that you want to reverse.
Okay.
Yes.
And that brings the piece around duplicate invoice risks. So I don't know whether you'll take that or Martin.
The issue of duplication.
Yeah, of invoice. Yeah.
As we have said, is oil products are quite sensitive products, and it is also capital intensive. It is cash heavy, and I don't know whether you have ever gone to a petrol station and sold on credit. You have ever been?
I've been sold on credit when I run my credit card. No, but just speaking from my business lens,
Yes.
so I have a number of customers who are petrol stations, and the appreciation I have about how they do the business, I know of a specific one whose major customers are these long haul trailers. So, and what they do is they give the petrol, the diesel on credit, so that when the trucks, they are paid once the truck has delivered the goods. So if the goods are going to DRC, once the goods land in DRC, then they are paid, then they come back and pay the petrol station. So those are typical credit sales that I've seen at a petrol station.
Normally, what we see is, for us, we see from the point of 5,000 filling, but we don't know who delivered, what is the arrangement, and where did it come from. So what I know, because some of my clients are in this space, they have a deposit with the main supplier. Talk of the main distributor. They have a deposit. And actually, for you to open a petrol station, there is that kind of who is supplying the product. Whose product are you selling? So what are the terms and conditions of operating such? So rarely would you have the issue of, because at the point of selling to me, that's a sale. And as such, that is what we call output VAT. The input is now heavy, because it is when now we see those tankers delivering. So the main supplier to that petrol station will have given an invoice with a delivery note. And at that point, then that is the VAT input you will have to consider.
Okay.
Then the credit note is a rare item when it comes to the purchase of that. But what would necessitate a credit note? I have been in a situation whereby there was a dispute between what was dispatched and what was actually delivered and got to the station.
So when you're saying what
to-
was
to the-
dispatched is to say what came from the oil marketing company
Exactly.
to the petrol station.
Yes.
Thank you.
So, and this has various factors, maybe from the distributor storage tanks to the main point. Maybe if it's a long distance, even the weather conditions, there'll be matters of, we have heard of spillage, even incidences of accidents of overturning tankers and everything goes to waste. So that was a sale from the distributor. That was a purchase that the petrol station operator was to kind of. So if then there is a considered view that this was a loss, then a credit note would be raised to reverse that. Otherwise, the instances of the selling from the petrol station to the end consumer may not really arise.
Okay.
Yes.
And if I may, Collins, you mentioned your long haul, the clients who have trucks that do the long trips and they are paid after. So for tax purposes, especially VAT, the tax point is either the earlier of delivery of the goods or the payment, whether in whole or in part. So in this case, in as much as maybe the petrol station has given the fuel and they have not been paid, you have already delivered the goods. So the tax point has already hit and therefore you have to account for tax. Yes.
So so they can't say, I'll wait until for me to be paid for.
The tax point has already arrived, yeah.
So I still have to pay for that tax.
You still have to pay for
So
that
even
tax.
if that truck guy will not come and pay me, I'll have to pay tax on money that I've not received.
Tax point. Tax point.
Tax point.
Tax point, eh?
The earlier of.
This is where we say it's hard small, eh? Yeah, so one of the other items that I thought we just need to look at, Martin, there's maybe you could speak around how we do the VAT treatment between, so there's the fuel has a VAT element, then LPG, which they also sell, is exempt.
Exempt.
LPG is a sensitive. You know, a car, not everyone has a car. From a household perspective. But LPG, the sellers and the distributors need to be keen with the finance bills on how it has been handled. Because there has always been that issue of it is a product used heavily or highly in the households, unlike a vehicle or a car.
Yeah.
And as such, yes, LPG will always be an exempt product, but it would always be important to look into what has the current finance bill said about it. All other products will always fall, are currently at a 16% rate.
Okay.
Because other than the main fuel, there is the small oils, engine oils. There is,
Your
you know,
shop.
we have said petrol stations has different models. Look at it from even the perspective of the operator within a leased ground is not the owner of the space.
Station.
So that is a commercial space. They would also have a VAT withholding element, if you look at it.
Yes.
And as such, there is also other services within a petrol station. The very common one, car wash.
Yes.
Car wash.
And service also.
Yes, puncture repairs.
Yes.
There is, I said about that quick pick
The
and
shop, yeah.
quick and carry shops. So rental income. So you could be also a withholding tax agent for the rent. So there you must be intentional in terms of which taxes am I supposed to comply with on monthly basis from that perspective.
Okay.
Yes.
Quite interesting. Any additions, Regina?
Well, so now that you've mentioned about exempt supplies, where for VAT obligation, where you have supplies or when you're selling and you have some portion of taxable supplies and you have exempt supplies, your input VAT will have to be apportioned because not all the input that you acquired was used to generate taxable sales. So for example, now in the selling of the gas, that portion, the input that was incurred in bringing in that gas, maybe transport or what, that one will have to be disallowed for purposes of tax because it was not used to generate output VAT. Yes, so there is the apportionment, we call it apportionment. So you'd take the input VAT that has come from selling exempt things. You'd have the sales from the LPG over the total sales, and then now you multiply by your total input VAT to know how much you're going to restrict because it is not used to generate taxable sales. So apportionment of VAT is important in that sector.
And just picking up from what you've said, Martin, we are an active player in this industry.
Yes.
You handle a number of clients who are petrol stations by nature. Do you think there's a risk of petrol stations overpaying tax? Just speaking from the conversation that Regina has mentioned around taking care of expenses, especially for these items that have VAT exempted.
Yes, there is the risk of such, and I'm trying to look into even the kind of the system the petrol stations are using in terms of the point of sale, integration of that point of sale with the e-teams. Then, if we look strictly on the oil products, then where majority of the products will be VAT, 16%. Where we have other products that have a mix of zero exempt, apportionment, lack of proper review of what proportions do it make or do they make, then the risk of paying high taxes are high. And I remember when the e-teams was introduced, there were so many challenges of adoption, and people will always be resistant to change. So majorly, KRA had to dedicate a team that will specifically handle the petrol station dealers, so that then they can walk them through from the old way of doing it. And given that majority of Kenyans are not used to a day-to-day asking of the receipts,
Yes.
and they also don't have their own PIN numbers. And remember now, we have gone to the high level of validation of expenses. So as long as you want your travel expenditure or fuel running expenditure be valid expense, you have to have your PIN with you around. So then it is a high call to the operators, to the owners of the petrol stations, to have a full-time tax person or an accountant to be reviewing before they file the VAT for the month, or before the 20th of the following month. They need to ensure that proper review has been done, so as to ensure that there is no risk of that overpayment or underpayment due to a mix of different VAT rates.
And that becomes a very critical role because it has a direct impact on how much tax you are paying and then how much profit you're declaring.
Actually.
Yes, and you remember, Regina, besides the e-teams for expenses, we also mentioned about stock management module. Now, this is the real stock.
Good.
This is the real stock.
Yes.
So, if, for example, a petrol station, the walk-ins customers have like 100 or 500, and maybe out of those, only 20 asked for the e-teams receipt, it then means at the close of the day, you need to run what we call the Z report, the day sales,
Okay.
which shows that we have sold this kind of stock. Remember, I'm aware of the fraudulent situations around VAT and the sales. It is either you have the stock, and that is why, besides the items of the invoice, we also have the stock management modules for that particular. So you either have balance of stock or the sales. So it is an enhanced collection,
Yes.
tax compliance from a petrol station perspective. And I think it was wise of you to kind of have this focus on sector specific, because there are so many challenges around their compliances.
Yes.
And as such, if we tell them of this, then it may be a wake-up call. Look, how have we been handling it? We need even to enhance what you may call a tax health checks.
Oh, great.
Yes, that after an year or so, you may have the accountant who or the auditor who just do the normal audit. But how exposed as far as with this compliance is concerned, then digitization from the manual way of how they have been doing things, as KRA enhances their digital platforms and applications, you can't dare as a business person to be left behind.
Okay.
You must.
They're working very hard at it.
Exactly.
Yeah.
So, so my viewers, as we progress with this, happy to address any of the questions. Just go to the chat and share the questions. I have these good tax experts here. They've all introduced themselves with CPA. So we have to make use of these CPA titles here with us. So maybe just one more item as we progress on this. So Martin, you've talked about this Z report and the reconciliation gap. But I was just thinking, one item that keeps coming is how do we handle the price changes that is being done midday? So EPRA announces the price changes at 2 p.m. So the price that was being sold in the morning and the price that is being sold at 2:15 is either higher or lower than the purchase price. So how is that handled?
Well, the issue of price change, it's a business. Do we talk of morality? Because you remember there was this tension that the war outside there would affect the oil, and it is true. But the question is, when EPRA changes the price, it will increase, and if it increases the selling price, it then means that the VAT output will be higher, and the bottom line, now the profitability, is what now we'll look into it. It will have the effect on VAT will affect the consumer, is the one who will feel it.
Yeah.
But remember, this product was delivered at a lower cost. So the gross profit margin will increase.
Correct.
And then, due to other operational costs, the bottom line may change. Yes, that's the impact of such. Otherwise, it is a plus or minus, depending on which way the price changes. Yes.
Thanks. So some of the items that we also then see that the challenges that are being faced by the petrol stations includes the cash handling and tax risk around that. So, for example, you make their payments done by M-Pesa, which is real amount of money. So, with the changes that Safaricom did on the M-Pesa payments, the cost of that transaction is carried by the buyer of the fuel. But on the card side, the petrol station has to meet the cost of the commercial side, the fees that the card operators charge. So how is that handled?
Well, in every business, and now outside the petrol stations, which is our focus of today, every business has its own costs, direct, indirect costs. So adoption, I can tell that majority of petrol stations have improved their payment systems or receiving payments from the consumers, they have gone digital. So the M-Pesa platforms are heavily used. That is a cost I usually see on my, so if I'm paying 3,000, I'll see 3,010. So it's my cost.
Yes.
So they have actually pushed those costs to us. It's not a cost to them. So maybe the only cost they will be charged, which is normal like a bank service charge, is on the maybe transfer from the till to the main bank account and the normal bank charges. So that is a risk management, which is better adoption of M-Pesa till compared to the cash. Because cash, you have two high risks. Number one, the employees themselves can decide you have not paid us for the last 3 months and we are still here. They can walk away with days collection or theft.
Yeah.
And we have had instances even where the night guards have been killed at petrol stations. So others, petrol stations are like any other businesses which will incur other costs like insurance. It's part of it as a way of risk management. The WIBA, they will have to comply with the likes of NEMA, the EPRA requirement. The county fees is also another thing that they need to look at. The all-round compliances around any setup business, they have to comply.
Okay.
Yes.
Any additions, Regina?
No, I just think the card fees are just an operational cost.
Yes, yes.
Yes, which the business has to bear for to be able to do business. Yeah.
Okay, thanks. So my viewers, I'm still calling out. If you have any questions, please share them on the chat so that my experts here can be able to plug in and give you some guidance on that. So there are some items around KRA audit red flags, Martin, that in your course of practice you may have encountered. Which are these and how? What will you be able to tell my viewers around them to just check? Being forewarned is being forearmed.
You remember the issue of missing trader
Yes.
during our last conversation.
That was during our first webinar, right?
Yes, the missing trader, the issue of special table. We thank God, we will no longer have the special table issues.
Yeah.
Yeah.
So, KRA can always give you an intent to review your books over a period of time. And they will come and look into different areas. But key to them will be the sales. Day-to-day activity, sales and purchases.
Yeah.
And then e-teams. And from e-teams, we look into how have you filed the returns on monthly basis and the annual tax returns. Remember, compliance review is not a 1 year. So minimally, they'll do 5 years.
Okay.
3 to 5 years, depending on your period of operation. And you can also be on the radar, meaning they have looked at your trends, and as such, they will know which are the key areas of review. So number one, they look at the sales, and because they have said all petrol stations must comply with e-teams, they look into the sales vis-a-vis the e-teams compliance and purchases. Then purchases, from there, the day-to-day running, input, output, the apportionment, because they will also look at, do you have a cash and carry store shop, and what products are there. I have even seen some of them have like, quote unquote, a pharmacy kind of. So if it makes the business to be more complicated, and they are all reported in one. So the frequency of cancellation of invoices, that is a red flag that KRA can be triggered to visit you.
Okay.
Then large VAT refund claims would also be an issue that would call for review. Then unexplained stock losses. We mentioned about the product being regulated product.
Yeah.
And as such, the regulator must have what we call allowable or acceptable levels for
yeah.
losses. So if then you have super losses or extraordinary kind of acceptable losses, then somebody from KRA will raise it.
Yeah.
And as such, they'll pay you a visit. Yes.
And also, if I may, when you amend your returns very frequently, I think I mentioned last time, when you amend a return to increase the tax you're supposed to pay, we're all good. If you're reducing the tax you're supposed to pay, then they become extra vigilant. And they'll want to understand why it is that you're reducing the tax you're supposed to pay. You need to provide supporting documents. And now with the provision of these supporting documents, then more questions come up. And slowly, it can morph into an audit. Yeah.
Okay.
So they're very keen. I've noted that with the relationship managers, I think I told you about them before, they even monitor the trends on a month-by-month basis because they have targets also. So they'll check in February last year, you did this amount. February this year, you're doing significantly lower. Why is it so? What has happened? What is this major change in your business that is triggering this to happen? Yeah. So they're very keen. I think all taxpayers out there need to know that by the time you're filing your return, everything is in order because KRA are eyes on us, yeah.
So it just goes back to your pet subject, documentation.
Documentation.
It has to be up to scratch.
Yeah.
So I have a first question here from Austin. Austin is asking, does the Special Economic Zones Amendment Bill 2026, how does the Special Economic Zones Amendment Bill 2026 impact oil farms?
Oil farms.
Yeah.
You know.
I know the EPZ bill is still under review, but then what the question would trigger is supply to special economic zone. You know, we know that supplies to the likes of the armed forces area, the oil would be VAT exempt.
VAT exempt, yeah.
So if you are supplying to such, we would now then to consider what have they been exempted, because there must be a promotion of a particular business that needs to. So it's a component that we can look into, and then maybe we can have a candid answer to that.
Okay.
Yes, but look at when we were preparing for this, I was just looking at even the major consumers. Look at even those industries that are heavy on like diesel or other lubricants, and they are supplied in heavy quantity, in high quantities. So this is a keen interest on the VAT input and how you claim about it.
How you claim it.
Okay. Thanks. So anything else, Regina?
No, nothing to add.
So, Collins, what we need now to tell our viewers and our listeners is that non-compliance in this day will cost a lot than what you can pay your tax person to keep you compliant. So it's better we adopt compliance for survival purposes of the business and to have business remain a going concern. Yes. So we better avoid those pitfalls that will put us to non-compliance. So ETIM's non-compliance, there are penalties. VAT under declarations, it will resort to those red flags for audit. Then interests and late payment charges, they will come handy. Disallowed expenses and VAT losses. So we need to be very much hands-on on our day-to-day compliance. Yes.
And reputation risk.
For
Definitely.
sure.
Yeah.
Yeah.
Definitely.
That's also the other things. And somebody mentioned business disruption when you're running around trying to address the taxman questions. Yeah, it's time you could be taking some cup of tea instead of.
Actually, it's in the wisdom of maybe KRA that some of these queries can be brought to the tax mashinani, ushuru mashinani point, where there is no clarity, you don't want that kind of disruption. Mashinani would be an easier way and route to kind of avoid those business disruptions.
Okay,
Yes.
thanks.
I think we've talked a lot about the petrol stations issuing eTIMS invoices, but we have not mentioned that they also need to make sure that for whatever expenses they incur, they are also eTIMS compliant. Yeah, because remember, for 2025, yes, KRA may give some leeway on the validation of income and expenses using eTIMS, but I think they'll be stricter as time goes by. So come to file the 2026 return, you'll be required to really support those documents. So I think I am Madam Documentation, keeping proper
Yes.
documentations and ensuring that whoever you're trading with is also compliant from an eTIMS perspective.
And I think as we continue with this conversation, one of the things that has stood out is the piece around documentation in all our conversation. And that piece has come out quite clearly. So there's some dealer mistakes, common dealer mistakes that we've seen that have affected the tax elements. Martin, as I'll come back to you quite a lot today because this is your day job.
Yes, common dealer mistakes. It is, let's not talk of the dealer and say common mistakes that business people make, the owners of the business. Number one, because I'm in the SME space, I know they don't start with the systems. For them, they have a capital, they want to invest in this space, and as such, they have not done their mathematics calculations on the level of compliance that they need. And putting the right systems in place at the very start, at the very beginning. Because then, number one, you're dealing with a regulated product that has, besides the tax person, before even you become, you get to the register of the tax person, you'll have to face NEMA. You'll have to undertake a EIA, environmental assessment, impact assessment on establishment of that. EPRA has to give you the license. You'll have to even have this enough space. You'll have to have a sufficient time for the lease of the place because the investment you are getting in is a heavy investment. You need to have identified the respective dealer or the main supplier, the main oil marketer, so that you have the agreement, the franchise. And I know they are very strict. They are very strict. In fact, you can note that when you're walking towards the petrol stations, they have solars.
Yes.
That is one of the things that, in compliance with ESG, sustainability, that is one of the adoption that you as a petrol station dealer, you have to get. So do you have even support? But, you know, you say that you have facilitated these people to go far and beyond. So they can have the working capital come to you,
Yes.
and as such, they're able to adopt. So the dealers need to ensure that they have proper systems. So move from the manual. So POS, which would be the very first adoption, then integration with eTIMS. Then get a qualified, experienced accountant who will ensure that you are compliant with the day-to-day. Then your day sales must always be properly reconciled. Cash, M-Pesa, direct deposits, card sales, those reconciliations. Because at the end of the day, you'll have to ensure that you have done proper submission for the monthly tax obligations, which major is VAT besides other taxes like withholding and pay as you earn. So, as she has said, emphasis,
Documentation.
Yes.
Any additional items, Regina, on the mistakes and what needs to be done on the reconciliation side?
So, so I think Martin has mentioned about documentation, and the reconciliations have to be done because you see, we mentioned that this is a very cash-intensive business, and in as much as people are moving away from using cash, there's still some elements of cash in the business. So the car wash, the boda riders who are fueling at the petrol station, and therefore it is very important to use what is available to you and try to automate so that you're able to do that reconciliation well. So to maintain very clear and good reconciliations from a cash perspective and also from an M-Pesa perspective. And then also there is the pitfall of eTIMS registration and integration now with KRA. It happens that Fine, KRA have actually come out and said they're not 100% sure, or they don't have an answer to every question at the moment. But they're still keen on validating our incomes and expenses using eTIMS. And so even if there are challenges that are coming up and people in the petroleum area are having challenges, it is important to have those continuous conversations with the KRA people, the teams that are assisting with the integration with eTIMS, so that we ensure that there's compliance. So as Martin has mentioned, compliance is for survival at this point.
Okay. Thanks. So, Martin, when we're having an offline conversation, you did mention there's this clear compliance roadmap for petrol for our dealers.
Yes.
Maybe you could just walk my viewers through that roadmap for compliance for the dealers.
Well, some has, okay, the bottom line is what will be affected. Because from the loading of the fuel or oil to the tanker, the dispatch, then from dispatch, we now have the delivery. Have you known about dipstick? Not dipstick.
Dipstick.
Dipsticking.
Yes.
So the petrol station dealer need to be keen on taking stock, and especially also during the staff shifts. That is also something that need to be, because of even cash reconciliations. So from the delivery, then stock recording. So what is the opening stock? Before you offload, what is the balance of stock that is in the tank? So you dipstick. Then you have to look at the quantities or the volumes that were delivered as per the delivery document. Then you compare with the actual levels as received. Meaning, on the road, there would be some elements of losses, either normal losses or abnormal losses. So if it is an abnormal loss, then it has to be documented. Then once you do the stock recording reconciliations, now we can now be ready to sell. So the pump sales. The pump sales, remember we mentioned about the Z report, the day sales. Did it go through? Because if you and me and Regina did not ask for eTIMS invoice, they may not do it instantly because also of the flow of the customers. So you need to do the Z report at the end of the day to reconcile with the eTIMS submissions and filing during the last, for VAT purposes. Then pump sales, the point of sale integration, then you generate the eTIMS, you now be able to get the VAT output. All this is to account for output. Because input may be during the month, you may have had like 2 or 3 deliveries, or at most 4, once a week.
Yeah.
So the input accountability, and also, is that the only product you are dealing with at the fuel station? So out of that, then VAT accountability and reporting. That flow needs to be strictly, closely monitored. Otherwise, you may have disputes arising from the dealers, the petrol stations, and the main the marketers, because this one will raise a complaint of, I received an invoice of this much supplied to us. whereas these are the actual deliveries. So they'll always be acceptable losses, which even are guidelines. There are guidelines by EPRA, which says that for this, we know there is petrol and there is diesel. So diesel has its acceptable losses, margins. For petrol, it also have acceptable margins. So if you exceed that, then a reconciliation should be done. And at the end of the day, even if there is a compliance review by KRA and we have proper records, it then means it will be an easy.
Becomes an easier conversation.
Yes.
Yeah.
Regina, any comments? I'm sure there's a documentation conversation.
Well, so in the same breath of VAT, there is need to be keen on not to claim input VAT on disallowed items or items that, one, do not lead to the generation of taxable income, or just items that are not even related to your business. Sometimes you'll find the boss has come, they want to go out for a movie, they take money from there. So there's some expenses that are not really related to the generation of that income. So to be careful not to claim input VAT on such elements. So that VAT return has to be clearly reviewed so that you're not claiming items that KRA will come later on and disallow and have you pay additional tax in future.
Thanks.
Maybe, do you know? We are used to the whatever, to the normal gas, oil, fuel. But even jet fuels, this is the planes. It is also a part of what we are discussing. So there would be that very operator of dealing with fuel jet, specifically supplied to the airports for the crafts for consumption. So you really need to account and have proper records keeping. And remember, fuel has very small margins. And that is why the issue of price change with the stock that was received at different price is a sensitive thing, and it affects the bottom line. So we are dealing with margin-sensitive products and a mix of vertable and non-vertable. We are also talking about a mix of setup in terms of beyond the fuel, there is the car wash, there is quick, and all that. So it is, once you comply with that main component, which other products are they being reported within the business accounts? Okay. So proper books of accounts, accounting, and proper classes, chart of accounts, very important.
Thanks. So I'll go to our viewers. They have some questions. Please keep the questions coming. We are here to help you answer them. So the first one, Regina, maybe I'll point this to you as we progress, and Martin obviously will always come in to chime in. How do we go about where you have invoiced a customer who turns out to be a bad debt, but you had issued ITIMs? Can we get a credit for tax?
Okay.
Bad debt.
Yes. So yes, bad debts do exist in business. And as Martin had mentioned, it will rarely be at the individuals who are fueling at the petrol station. Maybe you'll find maybe organizations that have the long-hauling trucks that you were mentioning, that they go and they don't come back. So you're allowed to apply for a refund of VAT that is related to bad debts. Yeah? So it is possible to get a refund of the VAT that you paid with regards to that.
Okay, so how does the journey go for that refund?
I'll ask Martin to guide on that.
He has easily said it. But however, VAT, bad debts. It's a tall order. It's a tall order. It's, you need to have a policy that guides on bad debts recognition in your business, where majority of SMEs don't even have these policies. It is in their mind, but does not exist in the writing. That's one. Number two, we have guidelines on write-off of bad debts. So you may have supplied last year, and so it is not possible, it is unlikely that you will declare that a bad debt this year. Unless there are reasons beyond or convincing reasons that you sold to this person and they have closed shop. So it is definite that there are reasons that can confirm that you not be paid. But remember, they can close trading, but they are in the process of paying their creditors. So bad debts write-off is not a one-off. It has to be validated by KRA and proper process, such that even engaging lawyers to make demands, you have to prove. So bad debts for any running business is not an easy thing. However much it can be claimed back, it is not easy.
So, just to chime in, so can we claim back bad debts? Yes. But there's a journey you have to go through. So
Yes.
what I pick from you, Martin, is chances are it was in the previous financial cycle. So there's some bit of changes that needs to be looked at there. Then when it comes to documentation, again, you have to demonstrate
Yes.
that you've made all reasonable efforts to claim that money back.
Yeah.
And you can demonstrate that you have not been able to claim. And then the tax agency will be able to refund.
Remember, there are two folds from bad debts. There is the corporate tax
Yeah.
and there is VAT.
Okay.
So if you declare a write-off, it affects the bottom line and the VAT.
Okay.
And VAT is in that very time of the early of. Yes, when you file the return, that's when you recognize the VAT. Yes.
Okay, thanks. So one of our viewers, Duncan Jaramba, and I'll read it verbatim. Thank you for the session. Duncan here. I work in supply chain and I'm particularly interested in how compliance can be leveraged as a value driver. My question is, in the oil and gas sector, how can procurement teams ensure real-time alignment between VAT, withholding tax obligations, and supplier payments without disrupting operational efficiency?
Wow.
This is a scholar, eh?
VAT withholding tax payments.
So my question is, in the oil and gas sector, how can procurement teams ensure real-time alignment between VAT, withholding tax obligations, and supplier payments without disrupting operational efficiency?
Do I start? And I'm looking at it, and Jaraba is in the value chain, and from which perspective? We could be having commercial, at the petrol station, we could be having commercial clients, corporate clients, and we have the end user, you and me.
Yes.
So for that purpose, then at the sale. But from procurement, where now it is the main distributor, the main oil marketing company. Remember, procurement is another process altogether. Me, as the person doing the order, I must know what are my reorder levels so that I place the orders, reorder levels, and the days that within which I should place an order. It is received, processed, and the terms of payment, what are they? Do you pay before delivery or do you pay after delivery, 30 days? So it's all about the organization's terms and conditions of business. But above all, how trained are your staff on the ground? And do they understand how efficient they need to be when this is coming around? So that there is no delays around the documentation reviews and the supply chain. Okay. So it boils down to the staff competencies.
Okay.
Yes.
Okay.
Any additional?
For me, I'd say that since VAT is payable by the 20th of the following month, you have 20 days to do your VAT workings, and withholding tax is payable within 5 days of payment. So I know there are organizations that work to limit the number of payment runs they have in the organization so that you're not paying withholding tax every 5 days. You can decide we can be paying on the second Friday and the fourth Friday of the month, so that in the next week, then you're taking care of withholding tax and then VAT by the 20th of the following month. So it is just ensuring alignment in the organization to see what works best for us. So in line with what Martin was saying about the payment terms. So you have to factor all these things, the payment terms of the suppliers that you're paying, and when you can manage to have these payment runs, because it is, I think it's quite disruptive to be paying every day, and then every 5 days, then you have to be making payments for withholding tax. So having a look at that, and then now also seeing how best you can incorporate that. If you feel that then maybe it is easier for you to do one payment for VAT and withholding tax at the same time, it is up to the organization. But then now I feel that the tone from the top and the sort of structure that you have and the organization that you have also becomes very key in supporting that need to have that efficiency and that flow of payment of taxation without affecting the business.
Thank you. So I'll be getting to the next question by Anthony Mwangi. But as we get into the next question, my viewers, you'll be getting a poll coming up soon. So just get ready to fill in the poll. That poll will guide us on what we need to do next. So when the poll comes up, please be ready to help me fill. So the next question is from Anthony Mwangi. Anthony Mwangi is asking, what is the assumption with KRA that all credits into the bank account are income, with total disregard to debits?
I tend to suppose Anthony Mwangi must be an accountant somewhere.
CPAs know each other, birds of the same feathers.
And yes, all the credits need not to be income. And KRA actually has their own way of reconciliation approach. They will ask you about what was the previous, in the process of compliance audit timelines. So for example, if they are auditing 2024 and 2023, they will ask you what was your closing debtors of the year 2022. Record keeping. So that the opening debtors, which will trickle into the bank statements during the subsequent years, that is not sales. It will be, chances are they were accounted for in the previous year. Now, do you have other income, or do we have description of other credits such that a director can have a deposit there, you can have other incomes getting there? So it is all about documentation, because payments are either withdrawals by the business owners or payment of expenses, which are easy to explain. And that which you can't explain and support today on eTeams Valid, you have a story to tell.
Okay.
Yes. So, Anthony, proper documentation, proper records keeping for your credit sales, so that when they pay the current financial year, you'll be able to say that these were debtors who paid during that period under review.
Thank you, Anthony. Now that you've been called an accountant, just accept that you're one, and I'm hopeful that that has covered that piece. So to my viewers again, I'm just reminding you that if you have any other questions, please share so that my colleagues on the panel can answer. And also just to give you another heads up that once the poll runs, you should be able to help us with the poll. Another anonymous attendee. Today, on Matters KRA, people are coming anonymous.
You
We don't want to be, we don't want the taxman to know you. I saw some comments that the taxman is doing a social audit. So if you post, I saw a meme that was running that if somebody posted that he's acquired a new vehicle, and the tax agency wrote the specs of that vehicle. And
Yes, I saw
you
that
saw that
too.
meme,
Yes,
eh?
I did.
You saw, yeah, the meme on the specs of that vehicle and the cost of vehicle, and then they say you've not filed tax returns for the
Yeah,
last.
you have nil returns for the last 5 years.
I can see you saw that. Yeah.
Yeah.
So that's why people are putting anonymous,
Anonymous attendee.
so that AI on social media doesn't. So this one is another anonymous attendee. How can a retailer ensure proper records of invoices under forecourt eTIMS integration, given that all transactions are transmitted to KRA as and when a customer accesses fuel at the pump? How can a retailer ensure proper records of invoices under forecourt eTIMS integration, given that all transactions are transmitted to KRA as and when customer accesses fuel at the pump?
Okay. So it means that with the integration with eTIMS, there is direct transmission of these sales to KRA. Real time. And actually on iTax, there is, when you open your iTax, you can be able to see the sales as they transmit to KRA. You are able to see these are the purchases that have eTIMS that I have done the purchases, and then there are the sales that you're making. So you can be able to track that. And then additionally, there is I believe the fuel management system, which would be able to guide on, this is the amount of stock I have out, this is the expected amount I'm supposed to be having in. Does it tie to what is appearing on iTax as the sales I've made? Yeah, so that is one layer of it. Martin?
And once you do that cost of sales, a reconciliation, that is opening stock, you add purchases, you less sales, you'll be able to get the closing stock. So that's as per the system, but then have the actual readings at the point of sale and the meter readings. Those records need to be kept
So the reconciliation.
for
yeah.
proper reconciliations, because you'll just have to justify it is either sales or stock at hand. Yes. The Z report, the Z report must be done. The point of sale and eTIMS, those three must tie. And if not, there is a variance that can be explained, and it must be within the normal acceptable levels. If not, document why. Yes.
Yeah.
So I know some people will be wondering what is a forecourt. So for the oil and gas players, so the forecourt is that open space where vehicles come and park for the fuel to be pumped into the vehicle and the likes. That is what's called the forecourt, for the sake of people. I know some of these jargons are used and people wonder what is, So the forecourt is from the shop going all the way out, just all the shaded area within the petrol station. That's the forecourt. I was just imagining some people being like, forecourt, ndio matatu ya kwenda wapi? Yeah, thank you so much. So maybe as we run through, any reflections that you have, Regina, on just the oil and gas sector, looking at some of the items we've highlighted, when you bring in your expertise as a tax practitioner, what are the items that we just want to probably share with our viewers on that in general?
The views I'd want to share is that KRA is coming. Let me just put it that way. And I have seen an increased drive, an increased push from KRA to really understand what is happening across all businesses in the country. And now that the oil and gas sector is very specialized, and Martin had mentioned it earlier, that they are even sending particular teams to this sector to be able to understand how they're doing business, to be able to drive solutions that will enable that sector to integrate to KRA, that will enable KRA to have visibility on what exactly is happening. So it is a call to have good systems, a call to have very good compliance levels. And Martin had also mentioned the issue of doing tax health checks, so that you're not only compliant from an EPRA perspective, from an NEMA perspective, but also from the tax angle. You're also very careful to ensure that you're in the right books with KRA. So documentation is very key, system is very important, and the journey is still continuing. So we don't, KRA doesn't have all the answers, but they are working very hard to ensure that we get there.
Okay.
Yeah.
And probably be coming to you for closing remarks as we get towards the end. Any other item, Martin, that you just keep top of mind that you have just as we look at this? And this is not your closing remarks, just
Yes.
top of mind thoughts.
Well, compliance is key. And we could be sensitive about only tax, but we have other areas of compliances that as a petrol station operator, you need to look into. You need to ensure that you have proper systems in place. You have you have key resource staff to ensure that you are compliant, and as such, your compliance means your business going concern is assured.
Okay.
Yes.
Thanks. So I sit here reminding myself that I'm director for SME for equity. So I have to sell. I have to talk about some of the solutions you're giving to our oil and gas. And maybe after that, I'll come to closing remarks. Because oil and gas is one of the key focus sectors that we have within the bank. And we've tailored solutions for them. So we do payment and collection for them. So we're able to do pay with equity. So for anybody who want to pay from a wallet, M-Pesa, Airtel, to the payment platform, we can be able to facilitate that. And we say kulipa na equity ni free, so there's no cost for you when you're using pay with equity to be able to pay for that. And once that money is collected, we also have POS, point of sale. So if you want to collect money from card holders, that is again a platform that Equity is able to provide to you as a station to be able to collect for the payments. And you don't need to worry about working capital because we can give up to 10 million shillings on an unsecured basis, and that money is payable within 7 days. So you're able to keep your station wet. You know, in oil and gas companies talk about wet station and dry station.
Wet
Yeah.
stock.
Wet stock, yeah.
Yes.
So we're able to provide that. So if you need support on your working capital for your station, just walk into any Equity branch and just tell them you want a dealer finance for your oil station, and we should be able to sort you out on that. Any closing remarks, Regina?
Okay. From a taxpayer perspective, especially looking at KRA, the burden of proof is with you as a taxpayer. And that's why we really emphasize on keeping proper documentation, because your argument is as good as the documentation you have. So if you fail on the document level, then your case collapses and there's no support for you. So documentation.
I'll baptize you documentation. Martin, any closing remarks?
Yes. Today we have dealt with a very heavy topic, and as such, it requires a high attention to details, not only tax but overall compliance, the NEMA, EPRA, ESG. Talk about environment and wastage. There is that NEMA and end user and disposals compliance. How do you handle the wastes? So even as we look at the underground tanks, do they have leakages? What are the inspections that are being done around it? So in essence, what I'm saying is NITRAM, accountants on NITRAM advisory, we are not only dealing with tax. We have a fully fledged compliance department that works around. We have able, competent people. We have a lawyer in the office. We have a company secretary in the office. And we have now the tax department that fully supports overall business compliance. So we look forward that it's only a tax risk. Actually, we are talking of risk management in the business. Tax is just but an item. So thank you for this opportunity that we are able to meet our mutual customers at a point of their need.
Maybe just for the sake of my viewers and members who would like to get more details around some of the items we've spoken about, I'm sure Anthony Mwangi has more questions to ask you.
Yes.
You could probably share some more details of how Anthony can reach you. for additional comments and follow-up.
Nitram Accountants Africa, we are based at CPS Center. It's the tallest building along Thika Road. Yes, that's where the ISPAC, Institute of Certified Public Accountants, Secretariat offices are. So come at second floor, you'll find us there and be able to attend to your all compliance, not only tax, all your compliance requirements that you are in, that are pain points in your business journey.
Thank you. So, Anthony, for your additional questions, Martin has told you where you'll find him to help you close up on that. And hopefully he will not charge you. I'll just tell him Collins will pay. Yeah.
Wow.
So, our viewers, you're coming to the end of our session. And allow me to then invite you for our next webinar, which will be coming up on 16th of April. And on our webinar, my panelists will be taking to you through managing family wealth, trust, and inheritance through tax planning. Our next webinar will be on the 16th of April and will be running on managing family wealth, trust, inheritance through tax planning. Thank you and have a good morning.